Hello, everyone. It's great to see all of you here today. We have people attending from all over the US, the UK, and Europe. We are delighted to welcome you to the webinar on double materiality in CSRD. My name is Gabriela Lovas, and I am the Community Manager of Earth Academy's new CSRD Hub. Okay, everybody, please note that the webinar will be recorded. Feel free to ask our CSRD experts, Shivani, Rajpal, and Lorinda Niemeyer, any questions you might have on the topic in the chat. We will select some of the questions from there for the Q&A session at the end of the webinar. We are going for an interactive mood, so keep them coming anytime. We have a lot to cover, so let's get started. Let's begin with a brief introduction of our speakers. Shivani worked for the GRI for over 12 years. In addition, she has gained expertise in SASB, TCFD, IFRS, as well as the CSRD. Her job as a sustainability reporting trainer for the last 15 years has been to keep up with the technical standards and lay them out in such a way that organizations and governments can easily understand and implement them. Lorinda has a broad range of experience in the field of sustainability reporting. She has worked as a regulator, a practitioner, a consultant, and now as a leader. As the head of sustainability for a large European insurance company, she is going through this CSRD implementation process right now, giving her unique insight. With that, let's jump into the first presentation. Shivani, the floor is yours.
Thank you so much, Gabriela, and thanks for the introductions. And welcome everyone again to the webinar. Before we get into the details of the webinar, just let's understand what we're going to be talking about today. So first of all, it's going to be divided into three elements. First, we're going to be looking at the context. So just to kind of bring CSRD as part of the context, we will look at ESRS as part of the context and try to understand the context of double materiality as well. Once we've done that, we're going to go into the concept. What is double materiality? This whole webinar is about double materiality. So we're going to be looking at the concept of double materiality, the definition of double materiality in CSRD, and try to understand how to implement that. Well, that's our cue to the next section, which is action. And that's where we're going to be putting the concept into practice by looking at step-by-step approach of how you actually go ahead and apply double materiality in the context of CSRD. So this is how it's going to be looking like in the next hour for you. Let's take a step back. And like I said, let's look at the context first. So what does it actually mean and where does materiality sit? So when you look at leading your organization through CSRD, there is no one step. There are multiple steps. It's an immense exercise. We call it over here in our team as a team sport, because this is really something where you need to involve so many different departments, so many different people. You kind of see this slide is not to go into the details of all the steps, but to really make you visualize that there is no one step in this. It's really a huge undertaking to lead your organization through CSRD. But what we are going to be focusing on today is really double materiality. So looking at the second part that we've actually highlighted, that's the critical step. Materiality is really critical and integral to your CSRD reporting. That's what determines what is material for your organization. That leads to what you're going to be reporting on, and it goes back into the business strategy as well. So determining materiality is really comprised of several steps in itself, and that's what we're going to be covering later on in this presentation. So again, if we just stay at the contextual level at this point in time, like I said, CSRD really changes the game for the reporting companies. The biggest aim of CSRD is really to bring sustainability reporting at the same level of financial reporting. It has expanded scope from what it was with NFRD, with only 11,000 companies reporting, with now really the scope expanded to more than 50,000 companies worldwide. The rigor has completely changed. What you're going to be reporting on is not comparable with NFRD or any other sustainability reporting that you've actually done so far. It's much more in-depth. There is a requirement of assurance. There is a requirement of digital tagging. Very importantly, the timing needs to be aligned with your financial reporting timing as well, which really means you have to be so coordinated with your approach when it comes to really working with different departments of your organization. And of course, double materiality as the concept that you do need to apply as part of being compliant with CSRD. So our focus for today is not to go through everything, but we have picked up the topic of double materiality, and that is what we're going to go ahead and look into more detail. Now, again, staying a little bit still at the contextual level, where do you even apply double materiality? So before we get to that, you first need to understand, and some of you may already know this, but you do need to understand the structure of the European Sustainability Reporting Standards. Now, if you look at the left side of the slide, you would see that there are two cross-cutting standards that are included. And these cross-cutting standards, ESRS 1, general requirements, really talks about all the different requirements of making sure how you apply ESRS, as well as including the principles and how the different standards actually work together for sustainability reporting. It does not have disclosures, but it is important that you apply ESRS 1. ESRS 2 is General Disclosure Standard, which has several different general disclosures that apply to any organization that falls under the scope of CSRD. So the left side cross-cutting standards that you see on this slide are applicable to all organizations who fall under the scope of CSRD and hence are not subject to materiality. But what is subject to materiality is what you see on the right side. Here, the topical standards there are 10 topical standards, and they're divided into 3 different pillars of environmental, social, and governance. Now, these are topics like climate change, own workforce, business conduct, affected communities. These are broad topics. And just for your understanding purposes, without going into too many details right now, these topics have subtopics underneath and subtopics underneath. And we're going to come to that. Just keep that in mind for now for contextual purposes. But all of what I just described on the right side are all subject to double materiality assessment. So what does it actually mean as a concept to apply double materiality? So now we're kind of moving from context to concept, and just if we go word by word from the definition of double materiality, it says a sustainability matter is material when it meets the criteria defined for impact materiality, financial materiality, or both. What does it actually mean in practice? It means that the organization has to apply impact materiality, and what it means is that the organization needs to look at inside out, meaning what are the activities and the business relationships that the organization has that has positive or negative effects back on the environment and on people. And while looking at that through impact materiality lens, you also have to apply financial materiality lens, where you have to look at the ESG topics and the effects, the financial effects that those topics have back on your organization. And those are your risks and opportunities. So again, coming back to in more detail about impact materiality, impacts stem from the application of impact materiality. There are 4 different types of impacts. They can be actual impact, potential, positive, or negative. And these are impacts based on the organization's own operations, its value chain, its products and services, and their business relationships as well. And you look at it from the perspective of the whole time horizon, including short, medium, and long term. Financial materiality gives the outcome of risks and opportunities that may trigger or are already triggering positive or negative material financial effects back on the organization's cash flow, its access to finance, its cost of capital, etc. Again, on an overall time horizon of short, medium, or long term. So impact materiality would give you impacts. Financial materiality would give you the outcome of risks and opportunities for the organization. So let's just put that in the context of CSRD, and let's just pick up a topic and try to see what it actually means, and try to apply those concepts. So we've picked up the topic own workforce over here. This is the S1 own workforce that sits underneath the social category. If you apply materiality and you think that own workforce has impacts, risks, or opportunities, and it can be material, then you look at the subtopic that sits underneath that. And one example is working conditions. If that is to look at whether we have impacts, risks, or opportunities stemming from that, you do need to further drill it down and look at the subtopic from it, which where in this example could be health and safety. And then from the perspective of the activities and the financial effects back on your organization, you need to understand whether you do have impacts, risks, or opportunities stemming from those or not. And in this case, an example of an impact or a negative impact could be potential negative impacts from exposure to substances of concern in workplace. So in that case, you can see how you started from topic, you went on to subtopic, subtopic, and you really came out with the impact, risk, or opportunity. Once you do that, you also look at these topics, of course, that ESRS provides, but you don't stay over there. You also look at your entity-specific circumstances and identify any other topics that may have impacts, risks, or opportunities stemming out of those. When you've done that, those material sustainability matters must be reported using the ESRS 2 disclosures, using those minimum disclosure requirements from them, and also using the topical standards. But what is the link to the impacts, risks, and opportunities? Why you actually come to that is also because unless you do that, unless you go into the details of that, you're never going to be able to capture connections back to your business and the strategy of the organization. And impacts, risks, and opportunities are the real outcomes from your assessment of materiality. That's where the assessment needs to be done as well. And as part of your reporting, you do need to report on the list of your material impacts, risks, and opportunities back in the disclosure SBM 3. And again, of course, it's a circular thing. So once you have determined the impacts, risks, and opportunities, you tie them back to the sustainability matter or the topic to be able to report on the disclosures underneath those. So it's a very circular way of actually looking at starting from a topic, going to impact, risk, and opportunity, and then coming back to the topic as well. And that is what you take away from this particular thing, where you can start with the sustainability matter, but you don't stay over there. You go drill it down to the impact, risk, and opportunity, and then relate it back to the sustainability matter. So just to kind of really conclude this part, it is to say that ESRS actually tells you what are the things that you need to do to apply double materiality, but it does not really mandate a particular process or tells you exactly how you need to do that. What you need to do is really to make a design, to follow and document the process that is fit for purpose based on the requirements from the ESRS 1 Chapter 3, which has all the requirements for double materiality. You do need to go back and consider the full scope of all the ESG matters listed as part of ESRS 1 Application Requirement 16, which is a whole list of your topics, subtopics, and subtopics. You also have to understand your own specific circumstances from the entity and include material entity-specific perspective as well. And you need to make sure whatever process you follow, it does meet assurance requirements. So that is the conceptual part of it. And now what we want to do is really from what we want to move to how. And that's where I would like to invite Lorinda to share her slides and take you through how.
Great. Thanks so much, Shivani. Great to see so many familiar faces, by the way, and familiar names. Welcome. I think we said at the beginning, one of the things that we wanted to do was try to bring this double materiality concept to life. And to do that, what we want to do is go a bit tactical for a minute. So one thing I often hear from folks who work in this space or have started thinking about double materiality or even have worked on it is, I sort of get in concept what it is, and Shivani just took us through that. But then how do I actually do this? How do we actually put it into play? And I'm going to move through some of these slides relatively quickly in terms of the how, but there's three things that I hope we'll take away actually, even as we're getting deep in the detail. One is what we're really focused on is how do we do what Shivani mentioned, moving from matters down to IROs, because that's really critical. That's where we really think about our business's role and the role of these on our business. We need to make sure we've got the right team at the table because as we'll talk through, we're going to look at financial materiality and thresholds, right? So bringing sustainability and finance and even audit together is critical. And the third takeaway is because this process will need to be assured, it's really important to land up front. What steps are in place? What documentation do I need? And all of that. Because as we'll see as we start to move through this, and I apologize a little bit in advance, is that there's a lot of technical details to get through and a lot of technical details to report on at the end. So if I can leave you with those three things as we start to go deep, those will be important things to take away when we go through this. So we follow a four-step process. And if you've read any of the materiality guidance from EFRAG, these might look relatively familiar. We follow a similar process. First is just understanding the context of your business and what is important to understand for your impacts, risks, and opportunities. Then we go to taking that process of sustainability matters down to IROs written in a way that we can test, and we'll spend a few minutes on that. Then we go into the assessment phase, which is all about criteria and thresholds, which is an area that I know causes some heartburn a little bit. We'll talk a little bit about one approach to do that. And then finally, the reporting piece. There's two elements to that. One is reporting on the process that you took. The other is reporting on the outcomes, which I'll step on the punchline, but needs to be at the IRO level, even more important to get down to detail. And then that, of course, has implications for what you report on as part of the broader standards. So 4 steps, and I'll take you through each of these with a little bit of detail. And if you have any questions, feel free to put them in the chat. Great.
Lorinda, it's difficult to hear you.
Oh.
Could you speak up a little bit?
Sure. Is it a little better if I move the microphone a little closer?
Yes, thank you.
Okay, sorry about that. Thank you for letting me know. Let's start first with context then. Have been a consultant for many years prior to my job coming here. And one of the things we often would say is your company strategy starts outside the company. And one of the most important things to understand for double materiality as well is what is the context of our business? So there's 3 things that we look at here. What are the activities that we take on a daily basis that are our business activities? What does our value chain look like? What are the things that are happening upstream in our operations and downstream? And then what are the business relationships that we have? These are all important and they'll play a really important role when we start looking at impacts, risks, and opportunities. Second piece is what is the world that we're operating in? How is regulation changing? How is the market changing? How is the role of sustainability changing in our business strategy? Does it make a difference by geography or market? All of these are really important questions to be able to answer, to think about what's material to the business. And then finally, stakeholders always play an important role when we talk about materiality assessments. In this case, ESRS has very specific definitions of who stakeholders are, and it's up to companies to understand exactly who they are for your business and how we engage them. But that's another important concept I'll take us through very quickly. So let's start with value chain. One of the things that's really unique about the way that double materiality is meant to work under ESRS is really getting into where in the value chain are our risks and opportunities. If I say climate change is important to my business, or I have an impact on climate change, it doesn't really tell me, well, where? Is it with my suppliers? Is it in the things that we produce? Is it in our products? So one of the very first important steps is really thinking through what does the value chain of my company look like? Here's just a really quick example. It's not an ESRS focused example, but what we've seen here is the company has taken their topics And they've thought about, well, where across the different parts of our value chain are these topics likely to be most material, right? And then what do we do about it? Right? But this is the kind of thinking that we're trying to push toward as we think about an IRO process rather than staying at the sustainability level. And the next piece we want to make sure that you understand is this concept of stakeholders. Now, if you've done a materiality assessment, you know that stakeholders are really important. We try to think, who are they? Who do we engage at which steps of the process? That piece doesn't necessarily change. You need to think through that. But there's a very specific definition for stakeholders in ESRS. And ESRS talks about two types of stakeholders. One is a set of affected stakeholders. So those groups or individuals whose interests are affected or could be affected by what you do every day as a business and across your whole value chain, which is important. And then the second piece of that I wanted to highlight, because it'll be important to document in your process and it's important for reporting purposes, is there's a notion in ESRS of even thinking about considering what we call a silent stakeholder. So nature, for example, future generations, right? It's hard to pinpoint a person, but those perspectives are really important when you're applying this kind of double materiality process. So that's something to be thinking about if you're leading your company through this. The second piece is, if you've worked with ESRS, you'll see that there's a lot of reference to due diligence processes, especially around negative impacts. And so the way that you think about your stakeholders when you're thinking about double materiality should also reflect how you think about due diligence in your business. So that's something important that I wanted to highlight. And then, of course, like all other things within ESRS, there's a place to report on how you engage your stakeholders. So being thoughtful and being diligent about recording that as well. The other category of stakeholders I'll mention are the users, the people who are actually reading your sustainability statements and their expectations. So as you think through the process, it's also important to think about, where do we want to engage affected stakeholders? And then where do we want to think about those people who are reading and expecting information from us as well? Two very important things for stakeholders. So that's context. And again, I mentioned I'm going to go through this kind of fast, so please do put the questions in there and I can go back and touch on pieces as we have time. So we've defined our context. We know the kind of context that we're operating in, changes in our market, our competitive landscape, our business chain and activities. So now it's time to actually do the work of thinking about, okay, how do we then take the topics and those matters and really drill down and think about building them into IROs that we can test in the next phase? And this is really where, if you've done materiality assessments, it may feel a little bit different from what you may be used to. As Shivani said, very often we talk about sustainability matters, climate change, GHG emissions, workforce conditions and such. We need to kind of go underneath to actually get a sense of what those impacts, risks, and opportunities are. And we need to set them up in a way that we can then test them properly with the criteria that are outlined in ESRS. So let's look at how we may do that for impacts and financial. So we start with the sustainability matters or sustainability topics. ESRS has a list of them. This is just a little bit more detail around that chart that Shivani showed at the beginning, looking at those 10 topics. And as you can see here, and Shivani alluded to, every topic has subtopics, and many of those have sub-subtopics. So if you roll them all up, you'll see about 90 to 100 subtopics and sub-subtopics already listed in ESRS 1. I think it's appendix or application requirement 16, since we've worked with this a lot, but you can find a list of all of these. And the expectation is, check these and see if these things are likely to be material to your organization from an impact or financial perspective. But not everything in the universe of sustainability is in here, right? For example, tax transparency, cybersecurity. There are some topics that may not be here. So it's really important to think about this list, but also apply your own entity-specific topics as well. So we start at the topic level, as we normally do, but we don't stop there. So let's take an example of air under air pollution, right? How might that look if we apply an IRO mindset to that? Let's start with impacts. And again, apologize, there's a lot of tables in here, but it's really important to pick up on the logic. So we wanted to go ahead and share a few at this level of depth. So we know we're starting with E2, that's the one topic in ESRS, and we've gone to the subtopic of air pollution. Now, we said before, it's really important to think about your value chain, think about your business activities. So even saying air pollution, that doesn't quite get us to that IRO level. So what we need to do is then step back and say, well, what is the activity associated with air pollution in this case, or with this topic, to start to kind of get us into the IRO world. And in this case, we could start with our own production, for example, and say one of the areas of business activity, potentially sustainable matter for us from an impact point of view, is particulate emissions from production processes, right? The particles and the things that are coming out of our production facilities, right? So that's the next step. And then the question is, well, what are the impacts from that, right? And we can start to see here how those just get more and more detailed based on the types of activities that we undertake. For example, maybe there are health impacts in local communities from these particulate emissions, air quality concerns, right? Because we're always coming back to what is the impact on people and environment. Maybe there's habitat loss over time for native species in the area from particulate emissions. These are all negative impacts potentially. And then maybe there's something positive. We're investing in new types of technology and process, let's say, with local universities. Well, there could be a positive outcome from that. So the task before us is to actually think through, okay, what do these actually mean in terms of impact on people? Is it negative? Because we said there's 4 types of impacts. Is it negative? And then is it actual? Is it happening now? Or is it something potential that happens over the long term? Okay. So this feels like a lot of detail, but as we'll see when we get to the next step, in order to test them at the way that ESRS expects them to be tested, this is the kind of detail that we'll need to be able to determine. And one of the things to take away is, if you're working at the IRO level, if the IRO has a different nature than another, so for example, it's in a different part of the business, it's in a different part of the value chain, it's positive versus negative, or actual versus potential, or maybe they're occurring at different time horizons, it's really important to do that thinking first, because that will then impact the methodology that we use to test them. So that's impacts. And then we would do the exact same thing then for risks. So very often risks and opportunities, because they're financial effects, they arise from 3 places. One is the impacts that we just talked about may have financial impacts back on the business. That's the first category. The second category is, well, maybe doesn't derive from an impact from our business, but it could be that there's some dependencies somewhere else in the value chain. That means it might be hard to get raw materials, for example, right? So we look at dependencies. And then there's just other context. What if regulations are shifting? What if market demand is shifting? These are all 3 really important types of parts of context to understand, to be able to think about our risks and opportunities at the level that we need to think about them. So for example, let's take those first 2 impacts we just outlined. Well, there could be a negative financial impact from that, a risk, right? Arising from fines, for example, or costs to remedy. So we capture those separately. Maybe there is a dependency upstream in our supply chain because we can't get the inputs that we need at the price we need them at. So we capture that as a risk, as a dependency risk. Finally, there's often opportunity in some of these as well. We don't want to forget those. So maybe if the market is shifting and we have the right technology in place, there could be an opportunity from new revenues, right? And that's part of this other context. So this is the thinking that we're really doing to go down into the depths that we need to test them. And then we'll come back up once we've thought about how we can test these, to think about, well, which actual sustainability matters are then also material. Once we've done that thinking and we have sort of this map of how do sustainability matters then manifest or transmit into IRs and Os, well, then we need a way to test them for materiality. Again, ESRS doesn't prescribe, these are the exact criteria, definitions, and these are the exact thresholds, right? Companies need to come up with those on their own, but they do provide guidelines on, for example, which criteria you should use. And those depend on what type of IRO it is. And we'll look at that in just a second. What we often recommend, and companies have flexibility in how we do this, just like we like to start thinking about what the I's in the IROs are first, before we test, we like to start by assessing the impacts as well. So we'll do that. Then we move into the risks and opportunities, and then we consolidate those together. And that gives us our material IROs, which then inform what our material sustainability topics are going to be, and then also what we'll report on going forward. So let's put that then into motion. Shivani mentioned before, there's 4 types of impacts, if you think about it. We're always looking at, is it positive or negative? And is it actual or potential? And depending on what that is, which is why it's important to have outlined and tagged what they are, we use a set of criteria that might be slightly different. Now, we're always looking at scale and scope. So if it's positive and actual, scale and scope. If it's negative, we add in this notion of irremediability. So can we restore, can we reverse the impacts or not? So these are the criteria that we use for impacts that are actual. Now, beyond that, just because it keeps us on our toes, what if it's not actual, but we think it's potential? Well, in that case, we start in the same place in terms of understanding scale and scope of that impact, but then we have to add this additional piece of likelihood, right? So you can see why, if you've done your homework in the first steps of actually breaking out, well, what is positive versus negative, what is potential versus actual, when you get to this stage, then you'll be much more ready to test what that looks like. So of those 4 types, we said we apply these different types of criteria slightly differently. So let's take, and again, I promised or threatened maybe we were going to go deep. So this is one of those slides, but we think it's helpful to bring it to life. So ask any questions if you'd like. We've taken those same impacts that we laid out in the tree just a few slides before, right? So now we need to bring these assessment criteria into the mix. Well, for the 2 negative actuals, right, we said we're going to look at scale, scope, and irremediability. And that's exactly what we've done. Now, what we've done here, companies can do this differently. We've just taken a scale of 1 to 5, and we've said, well, what is the scale at negative actual? We're going to say it's a medium low, right? And we go through that process for each of these. So you can see how much more detailed this often becomes than what we might be used to doing when we're just looking at materiality from the left-hand side here, right? And then at the end, we need thresholds. We need to understand, well, if this is what these criteria look like, are we going to consider this material or not from an impact perspective? So, and again, there's no prescribed thresholds. This is where you need to work with your own stakeholders. You need to work internally to understand, well, what are we going to consider material or not from an impact perspective? On the risks and opportunity side, we also have criteria that we're expected to, but what constitutes the threshold or what constitutes negative, financial effects or positive, that's something the company has to actually define ahead of time. So risks and opportunities a little bit more straightforward in terms of the assessment. We're really looking at 2 things. What is the magnitude of that financial effect, positive or negative? So how big is it? Of course, negative financial effects are risks, positive could be opportunities, and then a measure of likelihood, right? So we're always looking at those 2 when we talk about the risks and opportunities to understand financial materiality. And just like with impact materiality, we analyze these at the R and the O level, just like we did the I level, the impact level for impact materiality. So let's put that into motion with the same type of table. Here are those exact same risks that we outlined in the previous step, and we're just going to apply similar criteria. We have magnitude and we have likelihood, right? Same scale, 1 to 5. We look at a few of these. Potential fines from negative health impacts, right? Maybe a low medium, low likelihood, right? We can do something about this. So we've made the determination from a financial perspective that this is not necessarily material. Let's look at a different one. Let's look at cost to remedy negative impact from air quality. It's a risk, the short-term risk. It's the tail end of an impact, as we said. There's a high magnitude. Those could be very, very high fines that we have to pay, right? The likelihood, medium, right? So in this case, given our thresholds that we've defined ahead of time, is it material? In this case, we could say yes, right? So this is a schematic of how you can do the analysis. How you actually define magnitude, for example, the company will need to define ahead of time, or likelihood. And then which combination of those from a threshold perspective would lead you to say, yes, this risk or opportunity is material from my financial perspective. That's something that you define ahead of time and you report on it as well. So here's when I said at the beginning, get the right team together. Very often, on the sustainability side, we'll lead these materiality assessments. But in a world where we're talking about financial materiality, companies, their CFOs, their finance departments, risk, audit, they've been working in this world for quite some time. So it's really important to make sure when you're thinking about criteria or you're thinking about thresholds that you've actually done this holistically with the finance part of your organization, right? Now, you might bring some new perspective on which topics to cover, and they may not be the exact same set, right, for financial reporting and for sustainability reporting, but it's important to bring that team together So you're using common definitions, right? Or companies can open themselves up to potential issues. So that's risks and opportunities. When it comes together, you can use a matrix, you can use any number of visualizations, right? But very often the matrix that we've used for many years, it may be at this level, sustainability matter, or the topics level, right? If it's helpful as a visualization, by all means. But remember what's happening on the back end is what ESRS envisions is we're reporting on what's material at this IRO level. So we're going to have to connect the dots for our users of these sustainability statements, but it's really important to have done this analysis on the back end so that you could say what these IRs and Os actually are, because those will then get reported in ESRS 2, SBM 3, and we'll see that in a second. So this is super deep in the weeds, but it's really important to show that ESRS is a game changer in many ways in terms of expectations, but it's also a game changer in terms of the way that we do materiality assessments and what's considered sort of granular or specific enough, right? So I said the first takeaway, get to that IRO level, this is it. Get the right team together, this is it. And also be thinking about your process ahead of time, right? Because it's going to need to be assured. So it's important to have some of that insight ahead of time. So once we've gone through all of that process, right, then it's time to report. And I'll show you in a second some of the main things that we're expected to report on both the process and the outcomes of materiality. And we can see why it's important to be thinking ahead of time about what goes into that process. So from a reporting point of view, which is the tail end of the materiality process, we really focus mostly on two things. That's reporting on the process, which is done in the ESRS 2 standards under what's called the IRO 2, or I think it's, yeah, IRO 1, actually, I think it is. I'll check that. That's where you actually go in and provide details on the process that you followed, right? The second piece of that was, what is this list of IROs that's come out of it? So when we talk about IROs, it really is important that you've actually captured what they are, because those are going to land in one of the disclosures as well. And then, of course, more broadly, which is out of scope for our purposes, but just to put this process back into context is, well, depending on which sustainability matters, then coming back up, have been deemed financial or impact or both based on the IRO assessment. Then we go into all of the other standards, those topical standards that we showed you at the beginning. And that's when you say, okay, these disclosure requirements or these data points are indeed material, I'm going to report on them. And then there's also an expectation to go back into another disclosure and talk about how you engage your stakeholders, right? So it all comes back together, but the two things we'll focus on is the process and the outcomes. So from a process point of view, what we're talking about is the process to identify its impacts, risks, and opportunities, right? Not its sustainability matters, its impacts, risks, and opportunities. And the types of details that we're going to provide here are, what were your methodologies and assumptions? What was the process that you used to assess and prioritize them? What is the decision-making process and internal controls? Now, if you're from the sustainability world and haven't done a lot with financial reporting, data controls and internal controls might be a bit new, but that's also part of the value of having finance audit at the table first to make sure those pieces are in place. There's an expectation to go back to those IROs and say, well, how do we integrate these into our risk management overall? What are the input parameters that we use? What data sources, for example? And then are there any changes compared to previous years? So a very robust disclosure, which means a very robust design at the front end, right? So it's really important to get familiar with these and to think about building that into your process ahead of time. That's the process. The other piece that we then would report on at the tail end of the double materiality process is, well, what was that list of material impacts, risks, and opportunities, right? And then further on, this is part of the same disclosure, but it's something that would follow on from later analysis, most likely, which is not just what are they, but how do they interact with our strategy and business model, right? Because we're always trying to connect the dots on sustainability. So here, what we're looking at is, what are those descriptions of impacts, risks, and opportunities and where they arise? So that's why it's important we start to take that first step to kind of pull it into our value chain or our activities. What are the current and anticipated effects of those IROs? For the risks and opportunities, what are the anticipated financial effects or current financial effects? What is the resilience of our strategy against these impacts, risks, and opportunities? Are there any changes in them since the last time? And then finally, ESRS is looking for, well, which of these IROs are based on ESRS topics, subtopics, subtopics, and which did you bring in as an entity? Okay? So being able to report on all of this means we've designed that into our process in the first place. Right? Really quickly, and then this is my last slide on the process. That's a lot of tactical detail, a lot of abstract concepts, tactical detail. Really, to get this started, there's a few things that we wanted to leave you with. And I've been going through double materiality for several years with clients. Now we're doing it in our company. And so I can give a little bit of a refresher on kind of lessons learned, if you will. Before you get started, or even sort of as you're getting started, really do make sure you go back and review the content on expectations around materiality. They may not prescribe the process, but there's a lot of expectation about what the process will do. And being really clear on that and what you have to disclose about the process and outcomes will really help you make sure you've got the right process in place. The second piece is don't start from scratch. Go and see what you've already done in terms of materiality assessments, in terms of topics and stakeholders and all of that. Do make sure, and this was one of the takeaways, any assurance standards, any controls that have to govern that process, make sure you understand those up front and you build those in. Again, this comes more from the financial reporting world, but it's important here because we're bringing our sustainability reporting up to that same level of rigor. For impact materiality, if you've done GRI materiality, that's great. From a concept perspective, they're very, very well aligned with one another. And on the due diligence side, if you're using international instruments like the UN Guiding Principles on Human Rights, the due diligence pieces are well aligned too. So there's a basis to build on. You've got to get more detailed as we showed, but you'll have the concepts there. For financial materiality, I can't say it enough. Really do make sure that you're working with your finance and your CFO on what that process needs to look like, what thresholds might look like. You'll bring in new perspective in terms of which topics should be addressed, most likely, but really make sure that you've got that working relationship going so that this really is fit for purpose on the financial side. And then, of course, there are other standards here too that you can draw from. IFRS S1 approach to financial materiality, well aligned here as well. So if you're working on that, then that's something you can leverage. And then one thing you might want to do too is when you're just looking at that first set of topics, go back and visit our old friend SASB to see if there are some topics in there that you want to make sure you're thinking about from a topic standard too. So again, it's not convergence necessarily, but there's a lot of overlap, and we should definitely take advantage of that, especially if you've been doing sustainability reporting for a while. And then finally, I'll do the last piece first, and then I'll go back to my last bullet point, but document, document, document. If you've never been audited or you haven't had the pleasure, there's a lot of documentation that has to follow the process. And it really is about the process. It really is about the controls, right? And in this world, there's an expectation that our materiality process is assured right alongside the other data points. So it is a really different world for a lot of us who grew up on the sustainability side of the house. So it really is important to, before you get too far down the road, even before you get started, talk about this is how we're planning to do materiality. If you have standards you have to adhere to, make sure that those are in there as well. And then make sure that you're talking with the right folks in your leadership, internal audit, external auditors, and all of that to make sure you have the right buy-in, right? So a lot to do. Once it gets going, but keeping these pieces in mind is something that's really important. So that is a whirlwind through the depths of a process that you might take. Of course, you're going to have to make sure that this is fit for purpose for yours. But I will go ahead then and turn it back over to Shivani, and we'll talk a little bit about how we're working with organizations to do exactly this as well.
Perfect. Thanks a lot, Lorinda. And as Lorinda said, let's just look at what Earth Academy is actually doing to help organizations in this. So we have been providing trainings for CSRD with its application for a very long time. And when I showed you the first few slides, I showed you the number of steps that the organizations need to take in leading your organization through CSRD. So again, there is no one step, it's a lot of different steps. So we have been supporting organizations so far and individuals so far by offering trainings. But those individuals have also asked us to to tell us what's next. So what's next? Can you give us some more support, some more templates, tools, etc.? So CSRD Hub is our answer to that, where we will basically provide set of trainings, tools, and support for capacity building on CSRD. And we've divided it into different packages for the purposes of different types of needs coming from so many different individuals and organizations. So our first package is the beginners package, where it's absolutely for free. Organizations, individuals can sign up for this package. You will get newsletters regularly and updates regularly. Now, you don't automatically get to this unless you register. So you would see on the chat, my colleague is going to put the link for the registration. And I would say if you are able to then register yourself by just filling out this form that you would see, very brief form, then you automatically get to the beginners level. And we will very soon after the webinar, in a couple of days, we'll be sending out our first newsletter and the updates. So that's your beginners package. The second package is your expert package. So of course you get the newsletter and updates, but you also get the training on the application of CSRD and how you can comply with that. And you get an exclusive access to our community where we constantly answer questions. Now, important to know that people who've already taken course with us on how to work with CSRD, the masterclass on CSRD, automatically get to the expert level. So you don't have to worry, you're already there. And for the other ones, you can sign up for this. The next package is the professional package, where you, of course, get the training, community access, but you also get some tools and templates to make your lives easier at your organization. Basically, instead of kind of really making your own templates for this, we then create tools and templates that would help you and support you in the reporting purposes. Then we have the Professional Plus package, where you have all of what I've explained before. But in addition to that, you have comprehensive tools and templates and constant support. And when I say comprehensive tools, we have a very specific materiality tool that is kind of in a way of workbook that I will show you in the next slide, just some snippets of that. But that's kind of really an exclusive thing for this package. Then very quickly moving on to explaining the enterprise package. This is where we work one-on-one with the organization that contacts us to build customized trainings, to build customized tools and templates and support that really match their needs for their organization and the reporting team within the organization. So that's kind of really the 5 package support that we provide under the CSRD Hub. Very quickly, just to kind of briefly talk about the materiality tool. Like I said, it's going to work like a workbook. So you've seen when Lorinda took you through the 4 steps of materiality, it's really those 4 steps have sub-steps and a lot of different elements to be included. So what we've done is really put together a workbook with several different tabs where you actually, first of all, understand the context of the organization, think about the activities, the landscape, the stakeholders, etc. Really put your thoughts into that workbook, and from that, from those inputs, you screen the topics from we've kind of provided the whole list of the AR application requirement 16, the subtopics, the subtopics, and the topics, of course, and you can even create your own entity-specific topics. From those stem out the IROs, as Lorinda was explaining, and from those, we've actually put together the criteria for both. We've integrated the criteria for both impact materiality and financial materiality for you to be able to apply that criteria. And then from those, a roll-up comes for really determining what are your material impacts, risks, and opportunities, and then which ones you're going to report on and how do you manage those. So that's kind of really just a sneak peek to tell you what this tool entails, but really it's kind of used for the reporting organizations to take them through step-by-step approach of double materiality application. With that, that's kind of the end of the presentation, and we promised that we're going to take some questions. So here we are. We have received quite a lot of different questions. So I'm going to start with a few, and then, of course, if we're not able to address everything, we will, you know where to find us. We will also make these as frequently asked questions and send those to you. The first question I can already address are financial risks and opportunities caused by the organization itself, as well as external organizations. And I think there's a combination of another question together with it. Isn't it also possible to have a financial perspective from the impacts, not only risks and opportunities? So all is true. Basically, what we said was when you apply impact materiality, then you find out your positive, negative, actual, or potential impacts. Those impacts may have financial consequences back to your organization. So absolutely correct to say that impacts can also have financial consequences, but there can be financial consequences that are not already accounted for by your identification of impacts. And that is the reason why double materiality application is so important, that you do have to first apply impact materiality and then address your financial materiality as well, and then come up with the topics that are either material from impact or from financial or from both dimensions. So that's kind of really how it works. Next question coming over to you, Lorinda. There's a question about determining materiality for different topics and subtopics. So the question says, who and how do we decide if own workforce, working condition underneath that, or health and safety is material or not for the company? Are we supposed to create a survey for internal and external partners with 75 questions, with one question, or per subtopic? So it's a lengthy question to really understand, how do we contact stakeholders? Is it realistic to get an answer? With what added value should we kind of keep that in mind? And one remark is that they've tried to do a materiality analysis with only 20 questions before with topics, and the feedback was very poor. So any guidance on how to kind of go about it to start with?
Yeah, so for the person who asked that, I'll just say, first of all, I feel your pain. I know exactly where that question is coming from. I don't think I'm going to have the perfect answer, because it really does, in many ways, depend. But the one thing I would say is there are different ways to engage different stakeholders at different parts of this process, right? So for example, at the very beginning, when you're thinking about, well, which topics do we even want to start breaking down these IROs into, you can use research. You can use other types of conversations, right? It doesn't have to be surveys. In fact, people have mixed emotions and mixed feelings about the effectiveness of surveys. But what's really important is thinking up front, what are the phases we're going to go through, and how are we going to engage stakeholders at those different phases? You can use research, you can use estimates, you can use other outside information. And then when it comes to actually testing some of these for scale, again, think about what it is that you're looking at. For impact, scale, scope, irremediability, likelihood, you may need to bring together different stakeholders. It's very unlikely that you can just send a blanket survey to a set of stakeholders who can help you answer all of those questions. So it may not make the stakeholder piece any easier, but it's very important to know that you're always sort of pulling on different stakeholders in different ways to be able to answer the questions. It's not going to be just survey driven for the most part. I know we've used some surveys on different topics. We survey different stakeholders based on the topic. But one of the things in going to this world of IROs that's really important is it's going to be even more important to be thinking about who can help us answer these very specific questions. And is it a person, or is it some other sort of proxy, right? What's really important is think about that ahead of time, and then also make sure you're documenting how you're engaging them. So I can't answer that, but I think a lot of us have been moving away for a while from this. Let's send out 1,000 surveys to all kinds of groups of people and say, well, what do you think? Is this important or that not important? What's really important here is we're not asking them if they think that's important, right? We're actually taking that IRO and we have very, very specific criteria. So use that in many ways to be your guide for who you're going to ask for specific information on. And those that you ask on the impact materiality side are very likely going to be different from those that you engage on the financial materiality side, right? So there's a plan afoot at the beginning. Doesn't mean surveys can't be an important part of it, but you may already be doing other surveys that you can use from employees, for example, to get you started, and then just start to test other pieces, right? And build on that data over time. So I'm sorry I don't have a perfect answer, but I think the planning piece at every stage with those very specific criteria based on the very specific IRO, you can have a plan and then think about how you'll build on that over time. And some of it I'll just mention silent stakeholders again, because I actually really like the concept. It's going to be really important that you're probably using a bit of research and a bit of policy expertise. That's not a survey, right? That's more of probably an interview type thing. So think about all the channels you have and the stakeholders, make them very fit for purpose for the IRO and the criteria that you're testing. I hope it doesn't make it more confusing, but that's sort of the reality of trying to do it on the ground.
Absolutely. Thanks, Lorinda. The next question is, and I can address this, if the CSRD is not mandatory for a company, but they report voluntarily on it, does the assurance has to be a reasonable, or is it sufficient that it's limited assurance? So coming back to the requirements from CSRD, if you fall under the scope of CSRD, then you do have to go ahead with assurance. But like your question says, if it's not mandatory for you as a company and you kind of applying it on a voluntary basis, then that rule doesn't apply to your organization. And in that case, assurance is something that you do as an extra thing, but we do recommend going for assurance because it does really help with the credibility of the report. But it's really then up to your organization to decide which way to go. One other question that I would like to take is, when I was presenting, I said ESRS does not provide the how, but it provides the what of the application. So the question is related to, what do you mean by it's a principle, it's not a process? Well, what I meant was that within the ESRS, you are told what you must do to follow double materiality, but it doesn't really prescribe how you can follow that. And there is, of course, application guidance that is provided in addition to that, and that you can, of course, follow. And what our recommendations were with the steps that Lorinda took you through were also kind of taken and built from that guidance as well. But the idea is that whichever way you go, there are some elements that cannot be taken away, and that's the what part of it, and that you do need to take care of. And the process can be different and subjective for different organizations. Different organizations can apply the criteria in different ways. They can apply the thresholds in different ways. But what cannot be taken away is that you do have to go ahead and apply the impact materiality and the financial materiality and explain the outcome of that and put a narrative about what process you've actually followed to go through these different materialities.
Yep. And I would just add to that, Shivani,
Yeah.
for example, it says that you have to use criteria and thresholds. It even tells you what the criteria are, but it doesn't say, here's the exact definition you must follow for criteria, and here's the exact threshold you must use. Those are the things that the company needs to determine within the parameters of those principles and then report on, right? So a lot of it's, you need to describe what you've done, but you're not going to go pick up, here's the materiality playbook. You're going to have the guidelines that you'll need to go back and fill in conjunction with what can be audited and assured and, all that good stuff. So.
Absolutely. Another question kind of related to IROs is that, does ESRS have expectations on how the IROs are managed? Lorinda.
So there are expectations to report on how the IROs are managed, but you'll see there's sort of a hierarchy, if you will, that happens once those IROs are in place. There's reporting around policies, actions, targets, and metrics, right? It doesn't say if it's material, you must have these things in place, but it does tell you if it's material and you don't have these things in place, you should talk about when you're planning to put them into place. And so it's guidelines. They're prescriptive in terms of what should be there or what you should talk about if it's not there and report on them. But it doesn't tell you, for example, if climate change, GHG emissions, or mitigation is material to you, then we need to see an environmental policy and we need to see this and that. You need to report on what those are. And if you don't have them, then providing information about when they're coming is an important piece of it. So.
Perfect. Thank you, Lorinda. We have time for one last question coming to you. Do you need to do the assessment for all topics provided by ESRS plus the entity-specific topics, or can you make a pre-selected list to assess them?
Like anything else with materiality, I think what you would do is I wouldn't take all 90 or 100 sort of sub-granular level and build out IROs, right? Because some of them just may not be that relevant. Very often in any materiality process, you start with a long list and you give it a kind of a good once over, not being too prescriptive maybe. And then that goes into more and more sort of, deductive processes to start to really kind of nail down which ones are most important. So just like any regular materiality process, you're always going wide, you're kind of narrowing down, but there is an expectation, hopefully I paraphrase this correctly, you've at least considered that list, but you're not going to need to flesh out IROs for everything on that list. If animal welfare is not material to your organization, you're not expected to fill that out. So it's that same process, cast a wide net, start to use those criteria to kind of get maybe your sub list of topics, get your IROs, test those IROs, go back and make sure you haven't missed something. And those material topics, you can start with the ESRS list, but most organizations are going to have something outside that. I mentioned tax transparency, I mentioned cybersecurity. There are things in there that don't look like they're there as explicitly as they might be for your organization. So you're always bringing those two together. Just make sure that list is somewhere in the mix, that you've looked at them and sort of consider them, at least at a first stop basis.
Perfect. Thank you so much, Lorinda. And thanks everyone for your attention, for your patience. It's a big topic. It's really, like I said, big undertaking for an organization to go through double materiality and, of course, to comply with the ESRS and comply with CSRD. So, yeah, we are here to help. Also, good luck to all the organizations who fall under the scope of this. And we feel the pain and we will do this together. So with that, thank you so much for your time, and you know where to find us. Thank you.